Hello, everyone. Don Garman here again from Mirador Capital Partners. I missed you all last week. It was a holiday. It was Halloween, and we were traveling, and so I apologize. But we had a little swoon that got readjusted yesterday, and so anyway, I just wanted to come on and share just a couple November comments. Next month, of course, December, our last video of 2025. It will be a bit of a longer video, and I would certainly be sharing some thank yous, including to those of you who've been such vital and critical contributors to our firm's great success this year. And I'll share more about that next month. But I'll keep it short and sweet. A couple weeks here in advance of Thanksgiving. It is certainly a time to count our blessings. I know many of you have experienced losses this year. And so I think the best we can hope for is to keep our loved ones close and, continue to reach out and communicate with them as best we can. Time marches on. And as many of you have said and I've heard, time is undefeated. So we will certainly be counting the blessings around our house around the Thanksgiving holiday, including having both of our kids home, which is going to be very exciting. So the chop that we've had in the markets for certainly the last 4 weeks, certainly not unexpected, since that's exactly what, in essence, we were describing last month in last month's video. So I think what I would prefer to highlight as you look through our different strategies and approaches is our flagship strategy, which most of the people who watch this regularly own some significant percentage of, went out yesterday at an all-time high. The S&P didn't, the NASDAQ didn't, after last week's corrective action even through yesterday. No indexes are at all-time highs, and that strategy is. So why is that possible, or how is that possible? So the answer is that it is a very balanced approach. And you would notice today, if you're paying attention, that many of the indexes, certainly the tech heavy stuff, is down. And, there's a lot of concerns about whether this enthusiasm and optimism about the AI super cycle has been overly priced into a lot of these names. And so as money comes out of those, it goes into names that we already own. So we don't have to make big moves to capture that, and it wouldn't take much for that shift to even accelerate, which would be very positive for all of us who watch this from now to the end of the year. It really wouldn't take much to have something very interesting and special happen. We'll know more in December, but that's certainly observable today as you would check your accounts however you do. So the key for us, as always, is that our styles perform as they are designed. As I've said, you've probably all heard it. Luxury sedans ought to perform like luxury sedans, and sports cars ought to perform like sports cars, and minivans ought to perform like minivans. If your minivan's performing like a sports car, it's a sports car. If your minivan's performing like a luxury sedan, it's a luxury sedan. And a lot of people have gotten themselves in a one trade scenario, which is very nice when that trade is working in this sort of AI tech. And I'm not talking necessarily about our clients. I'm talking about the world. There's basically, as we've all heard, 6 stocks that are really explain 95% of the market move this year. Any budge or crack in that story will be super duper painful for a great number of people. And I'm going to refer, as I probably will a lot over the next couple of years, around that 2000 to 2010 era, where most people indexes were flat for 10 years, and we were a lot further ahead in 2010 than we started in 2000. So it's the strength of being not bound to one narrow category of the investment universe. As I've said, it's super pleasant when it's working, and it's also super unpleasant when it's not. And since so much of the world is pinned to these same 6 names, when the elephants start to migrate through the door, it's hard to get through, and they do a lot of damage trying to get out. And so it's best to sidestep the stampede, or in another metaphor, which I frequently use, avoiding the bar fights is a great strategy for long-term success. So I hope that's not too cryptic or metaphor laden or mixing metaphors, but of course that's what I do. And I'm proud of how we've done with our assets, with your assets this year. This has been a great standout year for you and thereby for us. So that makes us really happy around here. What I will do in December, and I think maybe more in January, is do one more introduce the team, because the team, I would say 2025 is a year where we strengthened the team across the board. We've added some people, some human resources here, not human resources people, but human resources. And so we go into 2026, I would say, with a clear focus on what it is that you guys need in this upcoming phase, and have made steps to build the firm according to what it is that we will all be needing in the future. So I'll leave it at there, and I'll say happy Thanksgiving, with extreme gratitude, giving thanks to you guys who, without you, there is no us. And we're never, ever, ever forgetting that very important point. So anyway, thanks again. We will see you in December, if not sooner. And I'll leave it there for now. All right, bye.